countries have a wide disparity in the proportion of their total natural gas needs that they can actually store. So, for example, Germany can store 23% of its annual consumption, whereas the UK can store less than 1%. And so,
wow.
What does it mean for the UK to have 100% of its capacity filled?
Of all the interviews I've done here on the Early Advantage, the very most popular interview was with a green chicken named Doomberg. And so I have hopefully had the good fortune, or the good wisdom, I should say, to bring Doomberg back, because he or they are my most popular guest. Expert on energy, also knows about crypto, knows about all sorts of things. The number one financial newsletter on the Substack platform, which is really saying something, because that is a competitive platform. And this is kind of a rocky market for financial newsletters. So the fact that Doomberg has been such a success right now really attests to the quality of Doomberg's research. So with that intro, Doomberg, welcome back to the Early Advantage.
James, great to be back, and thank you for that very kind introduction. I really enjoyed my first appearance, and I think you and I have great on-air rapport, and so that's probably why that first episode did so well for you.
Well, if it's rapport, it's from you, because a low EQ guy like me is just struggling to get by. But thank you so much. When we spoke, I think it was several months ago, things were looking rocky. It was maybe not too long after the Russian invasion of Ukraine. Energy prices were going crazy. Since then, things seem a little bit better. I looked at Brent oil prices. They're back below what they were before the invasion. Natural gas prices are not quite below, but they've definitely gotten a lot better. In general, I forgot to look at diesel, but I should have. In general, I think Europe has reduced its purchase of Russian natural gas faster than maybe some people thought that they could. Inflation in the U.S. is coming back down. And a final stat I will note, 71% of respondents in a Bloomberg survey of 134 fund managers expect equities to rise versus 19% now predicting decline. So things look better. Are you as optimistic for, I guess, energy and then perhaps markets writ large going into the winter?
Yeah, great question. And I would agree with you that judging by the current prices we see in the market relative to the significant uncertainty that existed when we last spoke, things have settled down. And there's a couple of reasons for that. And I would like to go through them in order, and then we could decide together what the risk of each of those pivoting is in the near future. So the first thing that's happened is much of Russia's energy is finding its way to the market, as we predicted it would. And in so doing, I think that removes some of the sort of riskier tails from the equation that may have been priced into the market during those periods of exceptional volatility. Second, thus far, thankfully, Europe has experienced an unseasonably warm late fall heading into December, but things do look set to change in that regard, unfortunately, this week and in the near future. But because of that unseasonably warm weather, Europeans were able to continue to stack natural gas without drawing down too much of it. And that has put a lid on the price of natural gas in Europe. Having said that, it is still, today as we're speaking, Dutch TTF is $43 per million BTU, which is the sort of barrel of oil equivalent price of something around $250. And so it's still quite expensive, but most of the worst case scenarios have been shaved off, given the so how the weather goes. We're putting together a presentation for our Pro Tier for our December Doom Zoom, and we have the character from Groundhog Day, who of course was a weatherman, and as it pertains to European energy, get up and check the weather every day. That is basically the story there. Additionally, the zero COVID policy in China has certainly dampened demand for oil and energy products in general, as it has put a clamp on economic activity in that critical market. That looks perhaps set to be changing here soon, depending on the severity of the variants and the impact on the population, if the limited steps towards reopening that Xi has been, I think, forced into by the social unrest continue. And then lastly, of course, the U.S. president in an election year aggressively released oil from the strategic petroleum reserves to the tune of 1 million barrels a day, which in the highly inelastic energy markets is a significant amount. That looks set to expire, although there is some jawboning that they may reconsider and release even more in the near future. When you take all of those factors together, I would say that it's somewhat surprising that the relatively robust energy prices we see today have persisted. And that's a pretty interesting indicator. Our view is if China reopens, um, and weather stays, weather turns a little cold in Europe, you could begin to see some substantial energy price appreciation here in the near future. Now, how all this pertains to the stock market, I think, is more driven by Chairman Powell and the tightening cycle, both with elevated interest rates and quantitative tightening or running off the balance sheet of the Fed. But at least on a second order effect, the price of energy is going to be an input into his inflation expectations. And so, yeah, a lot of flows to manage here to figure out what the net effect will be.
Yeah, I mean economics is ambiguous, and that's why those who can predict it well make money. I mean, things aren't clear by design or just by structure. It sounds like the weather is a pretty especially big factor. In other words, if we have a suddenly much colder than expected winter, that could throw everything off. At least in your view. I mean, I'm not familiar. How much does natural gas demand move based on weather needs? Like, can you have like 50% more demand from one winter to another? 40%? I mean, how does it toggle?
There's a couple of challenges. So in regions where natural gas is used both for the production of electricity and for the heating of homes, the weather is a huge impact into the demand. One of the sort of pushbacks that we've given on this whole, they have enough storage to get through the winter line of thought is the rate at which natural gas can be extracted from storage is capped. And if you get a cold enough spell for a long enough period of time, you could in fact short the grid at just the wrong moment. And in addition to that, there's another dimension is that countries have a wide disparity in the proportion of their total natural gas needs that they can actually store. So for example, Germany can store 23% of its annual consumption, whereas the UK can store less than 1%. And so
wow.
What does it mean for the UK to have 100% of its capacity filled? Nothing.
Yeah.
But in Austria, I believe they can store 75% of their annual needs. And so if they're 100% full, that's meaningful to them. Germany's in between. Europe on average is about 22, 23. And so we shall see. Again, we have consistently said we hope to be accused of being alarmist on this, and that things don't, the worst case scenarios don't come to pass. We have many thousands of subscribers in Europe, and their well-being is important to our financial well-being as well, in addition to our sort of thoughts as humans. But the worst case scenario, in our view, is Europe barely skates by because of the luck of the weather, and the leaders in the region learn nothing from the risk they have taken. I mean, it is no victory to gamble on the weather and win. To gamble on the weather and win just means you got lucky. And if that prevents you from internalizing the proper lessons and making the appropriate adjustments to your energy strategy, then that's the worst case scenario. Because, by the way, they have to refill the tanks all over again for next winter. And with the destruction of the Nord Stream pipelines, it's going to be significantly challenging. There's not all that much more incremental LNG on offer, but there's a far less amount of pipeline natural gas on offer from Russia, given the destruction of LNG, of Nord Stream 1, and Nord Stream 2, those pipelines that run under the water. So it's going to be, if they skate by this winter and learn nothing, and they're facing the same crisis next winter, I think that's the worst case outcome. The best case outcome is they get by this winter and the leaders change. So we shall see.
Yeah, I think you said it well with leaders change. In general in life, people themselves seldom change their mind. And just new people need to come in with new ideas. And 1% in the UK, that's pretty amazing. And just to make a super obvious point, it's not like, in the US we have, combined cycle electric generation using natural gas, but especially in the UK, a lot of the houses are just like set up to be heated with natural gas. And that's not something you can like swap out in the same way you can swap out power source and electrical grid. So like they're stuck. They need that gas, like it or not.
Yeah, and you're seeing countries switch to coal for electricity generation in a massive way, which of course makes a mockery of their ESG credentials and their lecturing of the rest of the world on our need to reduce our carbon footprint. The first sign of panic, Germany in particular, as we wrote in a recent piece, the number one source of primary energy in Germany today is coal, which is crazy, followed by natural gas and wind. Solar is doing nothing because it's the dark season in Germany, which is the capacity factors of their solar installations are scandalously low. And it's just really amazing to see, like everything that you would predict bear itself out. Of course, they're going to turn back to coal. They're not going to allow their populations to freeze. And so that means shutting down your nuclear power plants and and not drilling for your own natural gas are going to necessarily dictate such a perverted response, given again their arrogance on ESG in general.
And it never ceases to amaze me how they just don't embrace nuclear power. I mean, I know that's the point we very much agree on. Is nuclear power is basically the best solution. I mean, it's not a quick solution. It'll take 5 to 10 years depending on the regulatory climate of where you're at, right? But I mean, it's just a crying shame, really.
Well, it would take a lot less than that if they would just restart the ones they recently shuttered.
Well, yeah.
I mean, it's not like. And by the way, like the 3 remaining nuclear power plants in the last 30 to 60 days have been outproducing the entirety of the solar installations that Germany has spent hundreds of billions of dollars on developing. So to say nuclear is expensive or takes too long, I mean, this is. Again, as long as leaders think they can flippantly do away with high baseload power, high capacity factor nuclear power plants and replace them with intermittent sources like wind and solar, then we clearly have not suffered enough pain to impart some common sense into these leaders.
Yeah, you would think we'd be at that threshold, but I guess not. Let me shift gears. I looked at the Department of Treasury in the U.S. The website says, following agreement of the 27 member states of the EU, the members of the G7 and Australia, collectively the price cap coalition, we're joining in adopting a price cap of $60 per barrel on seaborne crude oil of Russian Federation origin. And I think that's about 90% of their exports is the seaborne crude. Price cap is an important tool to restrict the revenue Russia receives to fund its illegal war in Ukraine. Are you buying that?
We've been pretty vocal that this is about as crazy a concept as we could have imagined. So let me just say at the upfront, we agree with the objective to decrease Putin's revenue from oil. To impose a price.
You're not pro-Putin, to be clear.
Of course. In fact, we have long argued that the very best way to destroy Putin's revenue would be to flood the market with supply. The price elasticity of demand for oil in this case it's incredibly inelastic. And so very small imbalances of either excess supply or excess demand can drive wild price swings. Prices are set at the margin. And so you want Putin's oil to find the market, and you want to supplement it with as much of your own as you can, because that is the only way to reduce the price. To think that China and India are going to pay attention to what the European elite are dictating from the comfort of their political offices in Western Europe, as it pertains to their commercial negotiations with basically their ally, Vladimir Putin, is nonsense. And to think that China or India can't insure these tankers, the whole wedge here is that the G7 believes that because it has a monopoly on the insurance market, that this alone will stop tankers from moving product from Russia to India and China at prices above that price cap. I think that's nonsense. I think it's unworkable. I think it's silly. I think there are easier solutions. And we shall see. Look, I first to be happy to be proven wrong. But by the way, a price cap of $60 a barrel pales into comparison to what we could see in the oil markets if the U.S. and their allies would get busy pumping more oil. You could very easily see $20 or $30 oil, which would make the $60 price cap meaningless. And
that would really handicap Putin.
Of course, we saw what happened in the at the beginning of the COVID lockdowns when we had no place to put oil and it traded at minus $37 a barrel. I mean, and within 18 months, it was trading at $130 a barrel, a full $160 barrel swing. That proves to you that the thing that drives price and therefore Putin's revenue is not volume or blocking his volume. It's increasing ours and letting his go onto the market so that we flood the market and crush the price.
Yeah. I mean, we'll obviously we'll see what happens. We're along for the ride at the moment, but what you say makes sense. And for the record, you were always against any kind of embargo or refusing to buy his oil because it just drives the price up. And with China and India, they're delighted. It makes the relationship stronger with Russia when they buy more. So it hasn't really. Your logic was that's not the way to hurt him, and obviously this makes sense here as well. Let me shift gears again. With energy prices coming down, I read a note by Paul Krugman, a very famous economist who writes the New York Times, saying that if you readjusted for housing prices and took a more like near term measure, because they've come down really fast, but it's been like, the past couple months, instead of using kind of like a blended year average, some kind of a different historical rate. I don't know exactly how they computed, but his point is like, if you looked at housing prices very recently, we'd be looking at inflation in the US of less than 3%, which is like, pretty amazing. Do you do you worry about inflation? Is it a non-story at this point in your mind, just for from the perspective of an overall investor?
Well, I'll just say at the high level, we don't take much of what Paul Krugman writes or tweets
I
seriously.
somehow guessed that.
And so I'm not going to bother to engage with whatever statistical manipulation Paul Krugman has indulged himself with, in order to make clearly political partisan points. The Biden administration would like people to think inflation is under control, and Paul Krugman will use his, his reputation and his seat at the New York Times in order to do so. And so, PPI this morning came in a little hot. We'll see what CPI does tomorrow. We're recording this on Thursday. I think inflation is coming down somewhat because of the energy price abating, and it all really depends, I think, on the factors that we discussed earlier. China reopening or not, the degree to which Europe is thrown into a recession because of their lack of competitiveness in their manufacturing sector due to high energy prices. Whether peace can be brought about in the war between Russia and Ukraine, that would be a big factor that would throw some things off. So, but in my real life, anecdotally, I don't see inflation pressures abating. Every time I hit the drive-through or purchase something on Amazon, you look through when you may have bought that product 2 years ago, and you see the price differences. I see an awful lot of 30 to 40% price jumps and very few price decreases, except at the pump, of course. The price of gasoline is thankfully down to levels that we hadn't seen since before the conflict broke out, which is great. But by and large, I see some pretty sticky prices. Now, if we head into a recession and the labor markets weaken and capital regains control over labor, then we could see really wage prices coming off. And then, of course, as Krugman alluded to, the housing market does seem to have popped, at least in some of the hottest markets here in the U.S. and in Australia and Canada. And that, too, is, of course, deflationary. So, again, we shall see. I wouldn't take Krugman's analysis of it, but I'm just looking at the data, and we'll see how CPI comes out tomorrow.
Yeah, and hopefully not hitting the drive-through too often. I pulled back. My son still likes fast food, but anyway, every parent's battle, right? Fast food and screen time. Let's shift gears. Speaking of screen time, or at least relatively younger people, when you have 10 polyamorous millennials in a $30 million condominium in the Bahamas managing billions of dollars, one wonders what could go wrong, right? The crypto space, which I kind of think is very similar to the meme stock space, because it's a lot of the same investor base, and it kind of rises and falls with some of the same principles. Crypto has really had a bad year, a bad 2022, even well before FTX. It was just going down. I'm wondering what to do. I mean, I just as for fun, I bought a tiny amount of Bitcoin, and at first I was a genius, and now it's a little bit less than I paid for it. I haven't touched it, but what's your take on this sector? And I'll say my bias that I'm still struggling to find what's the there. If these things go up, that's because there's demand for those things, and I think the technology is cool, but I tend to worry, or tend to wonder, maybe just subsumed by central banks or subsumed by traditional finance, and what's going to be left for these little standalone cryptos. But I'm not a guru. Just wondering what your take is.
So the first thing I would start with is a distinction between Bitcoin and the rest of crypto, because I do think they're substantially different, and there's also much sounder regulatory principles in place for buying, selling, and tax reporting on your Bitcoin holdings. And I think it's substantially different than the rest of crypto and altcoins and what was going on at places like FTX and what we believe is probably going on at places like Binance and Bitfinex. And I don't think we're near the bottom yet in the crypto washout. And I would say the price of Bitcoin has actually held up pretty well, considering the contagion that we're seeing in the altcoin market and in the frauds. I mean, basically, to the closest approximation, essentially, all of crypto has been exposed to be a Ponzi, which is something we have been sort of writing about with our sort of two pipes analogy. There's nothing that could be occurring in that space that creates more fiat for investors to take out when they decide to leave the casino. And so they could wash trade altcoins with each other back and forth. And even something you said in your introduction to the segment, they were managing tens of billions of digital assets, not tens of billions of dollars. And there's a big difference between the two. You could issue 1% of the float and wash trade up FTT tokens to some ungodly number, and then mark to market the full value that you quote unquote own, even if you can't trade them or ever exit the position. That doesn't mean you have that amount of money. What it does mean is you could pledge it as collateral for loans for either more liquid altcoins or even US dollars or even Bitcoin, which is something that seems to have transpired here. And so it's not meaningless, but it is a key part of the fraud, of course. But the shocking nature of what transpired at FTX, I think will eventually trigger substantial regulatory intervention, and unfortunately, probably accelerate the adoption of central bank digital currencies, which I think is a severe attack on personal freedom and something that should be resisted as strongly as possible.
Yeah, that would seem like something you wouldn't like, but I think inevitably, like it or not, I mean, if you look at governments and technology over the years, I mean, technology basically almost inevitably accrues more power to governments as it adapts. And in a way, that's kind of what you want. And I know that's a jaded view, but if you look at the Constitution of the U.S., the right to bear arms, the people who wrote that were fresh off the heels of the average guy taking up arms and revolting against the British. Okay, when the governments and the people had muskets that took 2 or 3 minutes to load. But these days, we've got chemical warfare, nuclear bombs. I mean, you wouldn't want your neighbor having that, right? So it kind of makes sense that certain weaponry, certain surveillance technologies, for example, we would only want the government to have, not the average people. Financial technology, maybe a little bit different. It's not as hard-edged, I guess, but I just kind of see it as inevitable, whether we like it or not. Maybe I'm jaded, but that's.
I mean, I would say financial tools are among the more dangerous that a government can have. Just look at what Trudeau did to the truckers in Canada. Yeah. If you, in today's age, if you get your bank accounts and credit cards frozen, how do you live? I mean, that's in many ways worse than a prison sentence. And if you want a prime example of what the end state could look like here, if we're not careful, just look at what's going on in China with the surveillance state. These QVC codes on people's phones can be, at the flick of a switch, mass turned to yellow or red, and then you can't take public transport. You can't even enter your own apartment, depending on what you type and say and what others suspect you of doing with no recourse. You can be totally banned from functioning in modern society. And I think the need for a new sort of Bill of Rights in the U.S. is going to become ever more prominent, lest we fall down the slippery slope, because ultimately, if given the opportunity, all governments will become tyrannical. And don't think for a second that the current slate of Western leaders aren't looking with some sense of awe and jealousy at what President Xi has been able to impose on his people in China. And I worry more about financial tools than almost anything else, because you literally can't persist in modern society. I mean, ultimately, if the government can turn off your bank account, that is a fundamental assault on property rights. And in the absence of property rights, you really don't have any freedom.
Absolute power corrupts, absolutely. And you could argue we're ebbing or flowing closer towards that. Yeah, we'll see. And by the way, as a plug for the Early Advantage, a couple of weeks ago, I had Lisa Lin on, a Wall Street Journal reporter who wrote a book called Surveillance State about just what we're talking about, the Chinese system. And they're also positive, by the way. I mean, being able to turn all the traffic lights from red to green to allow an ambulance to get to the hospital faster. I mean, and just catching bad guys on the streets. I mean, there are a lot of positive, but there are also a lot of scary negatives. So, that the person in power just has more power. That's what it comes down to, and that tends to not always be a good thing. Let me shift to a final, not more positive topic, but in addition to crypto, 2022 has been a rough year for ESG, and I'm guessing you have a take on this. I mean, to me, there are so many good, smart people who are pro ESG. And what I mean by that is there's a lot of demand. There's a lot of goodwill there. And I'm not one of the skeptics who says, oh, it's all a bunch of, the whole thing's a scam. Now, there are a ton of scams, and that's the problem. There's a ton of hypocrisy, like Citigroup, and I forgot some EU commission on something, didn't like weapons until suddenly Russia invaded Ukraine, and the idea that war might be coming closer to Western Europe became a reality. So weapons are bad if they're protecting someone else, but if they're protecting me, now they're ESG. Now they can be in ESG funds, or Tesla gets kicked out of the S&P 500 ESG index while ExxonMobil remains. And it's obviously very complicated, and there's a ton of hypocrisy. There's a ton of people who just jumped on the bandwagon to make money based on all those, well-meaning millennials or whoever else is investing, Gen X's, in these ESG funds. But what is it at the end of the day? And then do you think there's any hope for ESG in any shape or form?
So I too am pro-planet, pro-environment, pro-human flourishing. And our energy policy, which is at the heart of the ESG movement, is really about trade-offs. There are no solutions, James. There are only trade-offs. And then the question becomes, which trade-offs as a society are you willing to make? I think ESG has been dangerously unserious in two ways. The speed with which it assumes we can wean ourselves off fossil fuels without substantial damage to the existing populations. And secondly, their opposition to nuclear power. And unless and until they change those two things, the ESG movement risks being swept aside in a wave of populism. And I've explained to my friends in the environmental movement who are passionate about minimizing carbon emissions, for example, as we continue to develop the economy, that the path function matters. And if you get the path function wrong, you could lose the right to make changes that might end up being net good over time. And beyond understanding the speed with which we can practically wean ourselves off of fossil fuels and the need for a true renaissance in nuclear power, there's a third element of this as well, which is the S and the G component of ESG are too often ignored. Mm-hmm. And per your point, the sheer amount of grift in the space that just gets hand washed away because it's, they meant to do well, a solar company or, pick your favorite. As long as you stick the right ESG label on something, you can get away with all manner of terrible corporate behavior that would be unacceptable for traditional businesses that aren't trying to masquerade themselves as do-gooders. And so unless and until we get serious about those three things in particular, I think we have reached peak ESG. I think the move by Vanguard earlier this week to exit itself from a group trying to achieve net zero by a certain date, and the pressure that Larry Fink over at BlackRock is under because of his prior statements, and the movement of some conservative-leaning states in the U.S. to take investment dollars away from funds who are propagating this ESG movement in the way that it exists today. I think we've seen peak ESG as we know it, and either we will redefine ESG to be something more consistent with physics and with human flourishing, while also doing our best to shepherd the planet, or it'll be swept away.
Doomberg, you are insightful as always, and I totally agree. Path function matters. It's not enough to look at an end and say, let's go there, we want that. You have to get there first. And I think we haven't thought about that. But I do think it brings up a lot of good thought experiments, a lot of good, struggle creates progress. I just hope, as you're saying, we don't go too far the wrong way and just wash away all the good potential with populism. And I think what you say is relevant and I think the right way. Doomberg, as I said, insightful as always. I love that you can talk about just about anything and have a very informed opinion on it. People like you are rare, or research businesses, I should say, like yours are rare, and your success is well-deserved. And your contribution today, this week, is much appreciated. So I learned a lot, and I believe those watching at home learned a lot as well. We'll have a link to your Substack on the video and hopefully in the show notes below so people can check it out if they'd like to learn a little bit more. Once again, Doomberg, thank you very much. And until next time, have a good holiday season as well.
Thanks, James. And happy to come back anytime you'll have.